Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. Before we get to the charts, I want to point out that we started our live market analysis. Again, that's where we have the public come in and see what we do on a trial basis. So we'll be doing that this Thursday. So we'll have a link below the video. So if you want to sign up for that, we'll send you the invitation Thursday morning, and you can come and see what we do live. And so you can sign up for that and come and see us Thursday, and we'll demonstrate the methodology and setups and signals in live markets for you. So we look forward to seeing you there. First market we're covering today, the Australian US dollar. The Aussie just failed to close above significant resistance right there, right around 78 even. You see that orange line? That was significant resistance for us. I would have been a lot more comfortable buying dips had they closed above that level. On the other hand, tomorrow you've got the Bank of Australia governor speaking, and you've got the monetary policy minute. So unlikely we'd want to do anything ahead of that. In the past, anytime RBA Governor Stevens has spoken, the market didn't necessarily like what he saw. In fact, last time the market sold off that day, so we wouldn't mind seeing that. Here's our RTT ratio for the Aussie. You can see that you have both your 5 and 10 day up. As short-term traders, that's a market where we can start to buy dips in there. I'd feel a lot more comfortable though with a close above 78 the figure. Then I'd be looking to buy dips. Nonetheless, though, for short-term traders, yeah, we're looking at week and eye buy setups in this market. Now, as intermediate, a little bit longer-term traders, we're still looking at selling rallies. And I've been saying, for a couple months now, there's a likelihood that you're putting in an intermediate-term bottom, sewing in a bottom in here in the Aussie, and that's what the charts are telling me. So stay tuned. Short-term, we're definitely take a look at buy setups in the Aussie going forward. Next market, the dollar chief, the dollar Swiss. Dollar Swiss, you're right back where we were 2 weeks ago, and we said, hey, this is an easy one. This market's on support. It's still on support. We feel from a longer term perspective that this market is consolidating in a sideways fashion here. If you pop out all the way to a monthly, and you look at the history of where that guy's been, you have to think, hey, the dollar's cheap against the Swiss franc overall historically, and that's the case for us. That's what the numbers are telling us. That's what the chart is telling us. If you look at this channel that the market's in now, you can imagine that you're just right in the middle of that. And again, it comes back to a sideways market, a consolidating market, right in the middle of a longer term bullish pattern. So not a lot of fireworks here. We're definitely still in the buy the dip camp. It's interesting, you're sitting right on support there. You see that green line. Even if it gives way, there's support just below that too. So we think continued sideways action overall, but from a longer term perspective, we're definitely interested in buying dips and holding them too, accumulating this market. Next market, dollar index, really the big dog itself. Look at how this market just continues to put out higher low, higher low, higher low. What's that? That's a bull market. So we definitely still like this guy. You had a bit of a reversal here. Shorter term, you had a 5-day pattern shift to bearish, and that may be worth taking a look at. And you can actually see that that green line, you're right on support. That's a 10-day pattern support. From a shorter term perspective, from a day trader's perspective, you'd be trading both sides of the dollar index. So, dollar index, I guess, similar to the Swiss franc in that overall it looks like you're going sideways here. A sideways market to us means two-way trade. So, longer term, we're definitely still holding our longs. From an investor standpoint, it's a bull. From a trader standpoint, though, we could shift pretty quickly into trading both sides of that market, which is fine by me, which is always pretty cool by me. I like trend trading, but nothing wrong with the little counter trend trading action too when that's called for. Next market, the euro, mirror opposite of the US dollar. What strikes me here is how small these rallies have been. You haven't had, if I pull up a weekly chart, you haven't had a significant short covering rally in this market yet. That speaks to the weakness of it. You got a ton of resistance up above. So even if you were able to spring, let me go back to a daily chart, even if you were able to spring a short covering rally here, you just have a ton of resistance up above. We just don't see a lot of room up above for that market. So long term, we're still holding on to long term shorts. Maybe short term, sure, we could take a look at both sides of the market. Similar to what I was just saying in the dollar, nothing wrong with counter trend trading, nothing wrong with making money on both sides of the market as we're giving this market room to breathe and work itself out. However, whatever form this correction wants to take, be it more of a sharper rally or just a dull sideways market. Stay tuned. Long term, pop out to monthly. Very simple. It's a bear market. There you go. It's a bear. Gold market. Pop down to the daily first. We're eyeing potential short setup in this area of the chart. You see a purple line there, 50% retracement, just above 1220. If it does get up there and you see that little bit of upside momentum you have right now stall out and you start to see that market rolling lower, we'll definitely be interested in going short that market here, and I'll show you why from a long-term trader's perspective. Here's where we want to be short. When this market takes out this support, I want to be short. Okay, here, I'll scoop that up even further. That's a big long-term trend line, isn't it? And you can imagine the type of sell-off you're going to have here. So when it does sell down through there, we want to be short this market for sure. So you've got short-term support holding. We see that as being a function of the U.S. economic slowdown that you traditionally get after the holidays through the winter. But now that you're in the spring, you got the spring retail season kicking off pretty nicely now. We think that boost to the U.S. economy is going to pull the rug out from underneath the gold market, literally. So we definitely want to be short when gold cracks that support. So back to the daily chart, we would love to see this market get a little bit higher, give us some kind of a nice formation here, a head and shoulders top, a double top against that resistance. Then we get a sell signal on the daily. Bam, we're going to be all about that. Last market we're going to cover is the 10-year note. The 10-year note is so important to us because it's a reflection of 10-year interest rates, long-term interest rates in the States. And, I've said it before, this rally that we're in now, 10-year notes are going higher, therefore U.S. interest rates are going lower. We still see that as one where once that cracks, once this bull move gives way to a bear and it shifts lower, then you're going to see a long-term sea change in this move, in this market, as U.S. interest rates go from creeping higher to start to creep the other way. Here's the monthly chart of it. Long term, you can see the great bull that has been the 10-year note as interest rates continue to creep lower and lower, and then also a function of the strong dollar too. European investors flocking into U.S. Treasuries, where you get some kind of a yield, and you certainly have the benefit of being out of euros, right? So that's definitely going to be a market to watch, the 10-year notes. Here, I'll pop up the interest rate market for you because you can see interest rates a little bit more clearly there, and it may make more sense to you. Same market I'm about to show you. This is just the yield on the 10-year. That was the 10-year note. The price of the 10-year note here, I'm showing you the yield on the 10-year note. And there you can see how at one point earlier in the decade, here you can see interest rates were 3.5%, 3%. Now they're all the way down at 1.85%. So interest rates have come down. What we're saying is here, if I pop out to a daily chart, maybe you can see it a little better, that at some point you will put in a higher low. Potentially you're looking at it right there. You put in a higher low. What follows next? You get a higher high. So if you could take out this long-term trend of lower interest rates and then you turn things around, that's going to be significant, and it's only going to add to dollar strength at that point too. Europe may be a place to watch too for economic strength there too. If you see the retail season kicking in, the spring retail season kicking in Europe too, I think everyone would benefit from that. Basically, good news is what's going to make interest rates go higher. Bad news is going to continue to pressure them lower. So that's really where we're at with that. Thank you so much. I also want to invite you to come and join us in our live market analysis at Trading University. We used to do that in the past. We would open it up. You could sign up and come and see what we do live. And we're going to start doing that again every other Thursday. So this Thursday, you can come and see us. You could sign up at the link below this video. And Thursday morning, you can come and see what we do as far as identifying setups and signals in live markets on the lower time frame charts that we'll be doing this Thursday. So, hey, come out and see us. We appreciate that. Sign up on the link below. Thank you so much, and we'll see you next week.